Welcome back, Evergreen traders and investors. This is our EquiTalks episode number 92. Today is February 3, 2020, Monday. My name is JC De Guzman, founder and CEO of Equilyst Analytics Incorporated. In this episode number 92, we will be discussing my analysis for AllHome Corporation, and the stock code is HOME. The question that will be answered by the end of this episode is this: should you wait near 81.5, the 61.8% extension of the down Fibonacci? It's a close-ended question that requires a yes or no answer. And you will find out what the answer is or what my recommendation is based on my evergreen strategy in trading and investing the Philippine stock market. And what is this strategy? If you are new to this episode, let me just allow me to give you a brief information or brief background information on what this evergreen strategy is. It's my collection of proprietary methodologies that apply both when you do short-term trading or long-term investing. If you'd like to know more about what you will learn from this online stock market course or online stock market seminar, please visit our website at equilyst.com and then click on the course page or menu on top. All right, so let's take a look at the daily chart of HOME. All right, here you go. So HOME closed today at 9.7. The support that I'm seeing is like what I mentioned in the beginning. It's in confluence with a 61.8% extension of the down Fibonacci, which is at 8.5. Resistance is at 10.13 or 10.10, which is in confluence with a 78.6% retracement of the down Fibonacci right here. All right. If you're a Fibonacci fanatic, then that's what I've done in here. I have plotted a Fibonacci so that we can identify a psychological support. Foreign investors are net sellers year to date, but they don't have a significant participation in trading HOME. Relatively speaking, the 10 SMACD combo of HOME is bearish. At this point, I am already telling you that there's no buy signal confirmation for HOME. I repeat, zero buy signal for confirmation for HOME. Risk level remains low, but that doesn't mean that you can enter on a new position on this stock. I repeat, there's no buy signal confirmation. In fact, the strength of the downward momentum is confirmed that it's getting stronger based on the DMI chart. Now, today, the total turnover value reached 20 million pesos. Local traders were the main drivers of HOME. And based on my trade and volume distribution analysis, the volume weighted average price of HOME is at 9.78. Unfortunately, that's higher than the last price of 9.7. Our goal here, or not really goal, but we are expecting to see, or we are hoping to see a VWAP that's lower than the last price if we are hoping to get a bullish momentum power indicator. But in this case, one of the four elements of the momentum power indicator is already bearish, and that makes the entire momentum power indicator bearish already. The dominant range is between 9.7 to 9.76. That's closer to the intraday low than the intraday high. So why is it important? Why do I check the VWAP? Why do I compare it with the last price? And why do I get the dominant range of a stock? Why don't I just take a look at the ask spread or bid spread or whatever? All of those questions are already answered in the online stock market course or online stock market seminar. Okay? Learn it from there. I don't want to discuss all of those things in here. Otherwise, this 10-minute video will become an 8-hour seminar. All right. For today, the true market sentiment of HOME is bearish, unfortunately also. So there's no data-driven motivation in here for me to recommend that it's okay to enter on a new position. No, there's no buy signal. So if you still have HOME, I would recommend that you preempt your trailing stop. And if you can't stomach preempting your trailing stop, meaning to say you're going to sell at a loss, And I really do hope that you are using a trailing stop. Otherwise, that's another degree. It's a leveled up problem if you don't have a trailing stop. But I really hope that you are using a trailing stop. So if for some weird reason you're telling me that your trailing stop is still intact, please preempt your trailing stop. If you can't stomach that, make sure that you reduce the percentage of risk on your trailing stop by a significant level. You can use our trailing stop calculator on our website. Go to equilyst.com, click resources, tools, and then trailing stop calculator. Why? Why am I suggesting this one with emphasis, with a strong emphasis? Because the downtrend is more than likely to continue. As you have seen already, I had to plot a down Fibonacci just to get a psychological support because there's no historical support anymore in here. Okay? So it's getting worse. The downtrend's getting worse. Okay? So now, for those who are planning, if you are planning to enter in a new position, please take good care of your capital. Don't waste it. Do a test buy only when the 10 MACD and the momentum power indicator are both bullish. In this case of home, as of February 3, both indicators are bearish. They are screaming bearishly. All right? Now, if you are one of our customers, if you're one of our subscribers, you can ask for our latest analysis and recommendation for home in our private clients forum, especially whenever you notice a significant change in price or volume. How do you subscribe? Go to our website at equilyst.com and then click on the subscribe page on top. There are 6 orange buttons that explain in detail each of those 6 inclusions in this stock market subscription service. Please, before you click the sign up, before you pull out your wallet or credit card, read the detailed explanation for all of those 6 inclusions from the very first letter to the very last punctuation mark. Because I don't want you to subscribe first, pay first, and then you will going to email us saying, oh, I thought this is what I'm going to get. Oh, I had a wrong expectation, yada, yada, yada. No, read everything first. Convince yourself that what we are offering is what you are looking for. It is not our job to convince you. It is our job to explain what we can give you. Black and white, what you see is what you get. It is your job to ask yourself, is this what I'm looking for? If your answer is a yes, then subscribe. You're welcome. All right? I hope that's very clear. Okay? And let me also welcome you to sign up to our free newsletter. This way, you will be receiving an email alert when we publish a new free EquiTalks episode like this one. Go to our website at equilyst.com and then click on the resources. Go to learn, and then you will see an orange sign up button. Sign up, and then check your email, your inbox for the confirmation email. If it's not in your inbox, check your spam or junk folder. And once confirmed, it will be guaranteed that you will be receiving an email alert when we publish a new episode. And also, go to the description box down below. You will see our links to our social media accounts. Follow us. That way, you will also be receiving an alert from your favorite social media network when we publish a new episode. All right, again, if you have follow-up questions, you can comment down below. Thank you for listening or watching to this EquiTalks episode number 92. My name is JC De Guzman, and always remember, be evergreen.